Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, I made it. I'm not as early as I would like to be, but we made it. Here we're going to be having CPI news here in a moment. The expectation for core CPI month over month is spot 3%. And all of the estimates are basically spot 3 and below. So if we were to get a spot 4, which is unlikely, but if we were to get a spot 4, this market would be devastated. And I really mean devastated. So now, if not, I think there's a very good chance, and in fact, I will come over here and I will go on to the gambling account and I will say I'm going to go long the treasuries here because I suspect that anything that's in line or below, the market will read as really good. And I think that you will probably get a pop that could be short-lived because then people will go, okay, well, this doesn't change anything and now we got to wait for the Federal Reserve, right? So that's the game plan. Good morning, Andre and Jake. All right, here we go. Yay! Okay. Wow. That was a woo! Okay, that's enough. Izzy says I just did the same thing. It was like you know what? I frankly I should have done that one live because that was an easy call. Okay, I didn't even pay attention to what the number was. Okay, the headline CPI was 0 versus spot 1, and the core CPI was spot 2 versus spot 3. Oh, they like that. Oh yeah. I want to so bad, but I don't trust the execution. Well, so I think what I did though is a little different from what you've described to me though, right? I took 2 contracts on there. I didn't have any stops or limit orders or whatever. So when I did that one, I'm basically saying, I think I know what the number is going to be and how the market is going to react to it. And it is going to go my way. And if I am wrong, I'm going to eat the whole thing. That's what I did. And it worked that time. That's why I'm sitting here going like, well, maybe I should have done that one live because it was a case where I was so confident. Like the chances that it was going to be spot 4 were very, very low, right? So, and if it had been spot 3, well, they wouldn't have moved up as much as they did, but they would have moved up. So, with that said, that really moved. That almost moved a whole handle. It's about 6 ticks short of a whole handle. Oh yeah, I did the same thing. I referred to last month's data on the on the Forex Factor calendar, looked at the resultant chart, looked at the forecast versus results on the calendar. Yep. I guess the thing that I'm some color commentary on this. When you come in here to Zero Hedge and they look at the CPI preview and they show you the forecasts, basically everybody was at spot 3. So it was 57 said spot 3, 12 said spot 2, and nobody forecasted a spot 4. So that's why I said, if we got a spot 4, this market would really fall apart. A spot 2 is a good beat, actually, on this particular news event, which is why they moved a whole handle. Holy crap. But, you know, again, even if it was spot 3, I think even if it was in line with the estimates, yeah, based on the context, like, market's expecting a lot of volatility here. Everybody's looking. This is expected to be the most volatile day of the year, or at least the options are pricing the most volatility all year. Then I know that even if it came in line with the spot 3 print, which would probably be viewed positively, that the market will probably run, but that it might come back really quickly. And so that's now. I didn't know the number at the time. If I had looked and had seen that it was spot 2 versus spot 3, would I maybe still be holding a contract? Maybe. Kind of should consider that. That maybe I should have held my contracts a little bit longer. But I only wanted to catch the initial pop, so whatever. Now, here's the thing. Now we have to think about what we got going for the Federal Reserve meeting today. And I am not so sure that this really changes anything for the Fed meeting. I still think that we get our first cut in September and that we get 2 cuts. I think that the projections will probably show 2 cuts. There's some people saying, it could be, you know, they could go to 1. I don't think so. In fact, I really don't think so. So in fact, I think it's more likely that they stay, it's still 3 rather than 2. No reason to cut this year. Inflation already coming down. No. So here's what's going on. Here's the way that I see it. The leading indicators like new orders, okay, PMI numbers are all weak. Very, very weak this past month, suggesting that the economy is slowing now. You are getting that decline in the economy that, if left unchecked, would lead to a recession. The non-farms number last Friday kind of canceled all of that out. Let's come back to the chart. Okay, when you look at ZN, okay, all of this right here is, oh my gosh, the economic data is so weak. That was all the PMIs, and then this one right here was non-farms. And they said, wait a second, non-farms cancels all of that out. It doesn't. It doesn't cancel it out because employment is a lagging indicator. The indicators that we were looking at that were showing that the economy was weakening are leading indicators. Non-farms is a lagging indicator. So I wouldn't expect to see that weakness in the non-farms for a couple more months. So if we were to wait until we started to see that weakness in non-farms, we would probably cut too late and the probability of it forming into a recession would be higher. So what I'm actually seeing is that the data is now finally in line with the Federal Reserve's projections. They thought that this weakness was going to come into, the last part / beginning part of this year. Last part of last year, beginning part of this year. And it didn't happen. It didn't happen. And it basically got pushed back by a half a year. But now we are seeing that data. And so the Federal Reserve's plan to cut in September makes sense and is exactly what. So yeah, they're not going to do anything with the rate today, of course, right? They're going to hold today, okay? But because it is a quarterly meeting, you're going to get their hold on, I'll get to that in a second. Because it is a quarterly meeting, you are going to get the dot plot and you're going to get their economic forecasts and everything, right? So I think that when you get the forecasts, that it's still going to say that the Federal Reserve expects they're going to cut in September. That they cut in September and 2 cuts is what I think it's going to say. So that doesn't, in other words, this number does not, well, to reiterate rather, not in other words, but to summarize, this number does not change what the Federal Reserve is going to do, but what the Federal Reserve has told us that they're going to do and what I expect to see from the meeting, the market will interpret as good and will rally on. So I don't know how much further rallying today we can get, but whatever. By the way, this jump in the treasuries not quite or rather erasing the high from the non-farms. That is at 110.20 half in the 10-year. So I kind of suspect, well, let's not say I suspect, but let's just mark that level down as a high. Let's mark that down as a high. Okay. Uzi says, Citron Research announces they are no longer short GameStop. This was their second attempt to short GameStop after a 100% loss in 2021. Wow, really? That they were short it again? That's kind of crazy. Well, let me tell you what. Remember yesterday, I was looking at the chart and I was like, well, I don't know if this movement here this morning looks all that great. If that's the best that they can do, then that's a really bad news for GameStop. Well, it was not the best they could do, because later in the day, see, I was looking at it right here and I was like, is that all you got? Because from here it was like, the thing that I'm looking at is, what are the future orders going to be? And the future orders are going to come from A, retail traders, and B, maybe shorts, if there's still shorts out there. I would have to guess, I would have to assume that there's got to be some people that were lucky enough to have caught, shorts way back in here, right? This day. The crazy thing is that this whole thing right here, my understanding is that this right here is basically the GameStop offering. That they got basically like 29 was their average price, and they did the whole thing in that one day. That was the news that we got last night. Okay, so then on Monday it came down and it was kind of lackluster. So that's where I was saying the retail traders appear to be like dying out. Now maybe this might have just been that everybody was tired and it was kind of depressed sentiment and everything like that. So that's where I was like, okay, if that's the best you can do, that money's not there, and then you're going to go lower, that could be really bad. And what instead happened was we got a really strong rally. So now that we got a really strong rally, it's kind of back to anything is possible. Now, seeing that headline this morning, Citron Research announces that they are no longer short GameStop, suggests to me that this is actually Citron exiting. What do you think about that? That's my theory, is that is Citron exiting. If that is the case, what you might see this morning would be a little bit of retail excitement in the overnight and then on the open, and then fading as there's not new money coming into the market. Okay. But if that's wrong, or there's other big shorts that have to get out or something like that, then maybe it just keeps going. So that's where I have to say, I feel like anything is possible with GameStop. I'm not confident in like taking shorts. I'm still very, very skeptical of Roaring Kitty being able to have his options expire in the green, though. One of the things that I've been seeing people say is that, and they could be very careful, there's going to be a number associated with this. Don't read anything into this number. That's just the number that people are talking about, and I can't like verify this, okay? But a lot of people are saying, well, because they have so much cash on hand now, they should be worth at least $20 a share because of that. Well, okay, maybe. But it's kind of crazy. And again, like, how much more money is there in the retail traders to keep pushing this? Right? There can always be more, man. Like especially when the retail crowd gets involved, the amount of money that can come out of that is just absolutely insane. We have absolutely no way to predict how much it's going to be or how big it's going to be, right? That's why it seems incredibly foolish to me that Citron Research still got in short on GameStop. That just seems so dumb. But I don't know. Maybe they got short at 30 and they made money on it. Who knows? Who knows? I guess for me, I can't get past that. I don't like this company. Like, look, if I'm going to buy a video game, it's going to be on Steam. And I don't care if GameStop goes and does this complete reimagining of the company to be an online shop, and I'm still not going to buy there. They got a ton of cash on hand 2 years ago, and all they did with it was create a scammy, stupid NFT marketplace. So I don't have any confidence in this CEO. I don't have any confidence in this company, and I don't like the stock, and I have no interest in getting involved in it. Short term, let's see what happens. It's clearly, at the very least, after yesterday's action, clearly it's going to be a fun ride all the way to the expiration of the options, right? So I suppose you could do another offering, but like, I kind of feel like that if you do another offering that you're really just kind of like, you're really milking it at that point. But I'm still super surprised that after the offering and everything else like that the retail traders are still 100% dedicated to this is just crazy to me. Well, they got Citron Research to bug out. How many more shorts do you think there actually are? Because the short interest wasn't that high. Oh, so was it options? Let's go around Reddit here. I wish there was a subreddit on Reddit about GameStop that was not pro GameStop or anti GameStop, but just about GameStop and pro being accurate. You know what I mean? Like, anybody comes in and they want to talk about, oh, the halts, it's all a scam. They're halting it when it shouldn't be, and yada, ban. Because it's not. It's a feature of the exchange. It's done algorithmically. You can predict where it's going to happen. Okay, let's see if I can find something though about the Citron. Okay, so let's read Citron Research's tweet. They tweeted, Citron is no longer short GameStop. It is not because we believe in a turnaround for the company fundamentals will ever happen, but with $5 billion in the bank, they have enough runway to appease their cult-like shareholders. Despite Wedbush setting an $11 target today, we respect the market's irrationality. After all, Dogecoin remains a $20 billion entity. While the increased share count might temper the mob mentality, Citron will be watching from the sidelines for now. By the way, the Kitty livestream was still an insult to capital markets. Wow. Could you? I just, man. Can you feel the seething bitterness over this from them? Like, I would just say, hey, we're no longer short this. Okay, cool. But you have to put in this thing that, like, but we're still right about things. Okay. Like, you want people to hate you more. Just keep talking, keep digging, keep digging. Man, that, like, the more that I think about that tweet, the more I'm like, who is in charge of their Twitter account? You're an idiot. You should be fired. I can tell you, listen, this is my area. Should I be running these Twitter accounts for, like, large companies? Hey, if you're a hedge fund and you're having problems with public relations, you could hire me and I can help you do your public relations and tell you what to tweet. And I will tell you that it's really stupid to insult everybody with a tweet like that. That could be, you know, I could be worth, you know, $200,000 a year just doing tweets, I think. What do you think? Good idea, bad idea? I guess the problem is, here's the problem. Here's my big problem. Is that I don't know any big hedge fund owners. I gotta get the connections. Gotta get into the game. I gotta spend more time. You know, I'm gonna go skiing this year, but I'm planning on going up into to north to Snow Basin because I'm further north. I can go up there, less competition, right? Not as packed of a ski resort. But what I should really be doing, maybe next year, what I should really be doing is going to Deer Valley and hoping that I run into people that run hedge funds, right? Build the connections, grease the wheels a little bit, manage their social media, start my own hedge fund. If I started my own hedge fund, I don't think that I would make shorting stocks a significant part of the fund. Yeah, no, I don't think so. I'd rather do momentum. I don't know. I guess if I was successful with momentum, maybe I would open up another arm that was long short. But if I was in a long short arm, I wouldn't be short any of the meme stocks, right? Whatever. Speculation alert. Roaring Kitty might join the GameStop board. That sounds like so silly and dumb. He has enough shares that and it would actually make complete sense to put him on the board. So, okay. Okay, so here's the tweet from somebody speculating. It's a meme with Ryan Cohen saying, okay, and just like that, I will dump these empty stores on the apes in an IPO spinoff, take all the cash and earn 5% interest forever. and finally pay myself the hedgy bonus. Papa Icon can even be proud of me. So I don't understand why everybody is so enamored with, oh, they can just put that money into treasuries and get 5%. You could put your money into treasuries and get 5% right now. Why don't you? Is 5% really that great? If you think 5% is that great, go and do it. Go and buy bonds. But the way that things are looking, I don't actually think that many people are buying bonds right now. Maybe they should be. If we're going to cut interest rates in September, maybe we should be. It's a nice thing to do with uninvested. Yeah. If you don't have anything to do with it and you don't want it sitting around, the only intelligent thing to do is to put it into treasuries. But everybody keeps talking about this, like that putting it into treasuries is a great investment. And it's like, yeah. And meanwhile, Nvidia keeps doubling every 3 months. Like, come on. I think there's better places to put your money. Because some of the apes are like, oh yeah, they can just sit on their money in treasuries and they'll make money that way. And I'm like, okay, if that is all your company that you're investing in is going to do with their cash, you don't want to be in that stock, right? And that, I think, Phil, is really telling to me. It's really telling to me that I'm seeing, like on Superstonk, I'm seeing so many people gloat about how they can just put it into treasuries. And I'm like, if all they're going to do with that $4 billion in cash is put it into treasuries, this is not a stock I want to be in. You need to be doing something with it, investing in it. And if you're with it, and if you're not going to invest with it, then this is a useless company. Like, come on, you could pull a micro strategy and become a Bitcoin ETF, for instance, right? Like that would definitely send the stock, you know? You roll your unused cast into 30-day boys. If you're managing your own money, you should be getting bills and treasuries and so forth. You can manage it yourself and save money from, you know, what the bank would take to manage it for you. It makes 0 sense to have that much money and have the bank have it for you. The only reason you'd want the money in the bank is, you know, to make it easily available to you through a debit card or something. Okay, so treasuries. Let's kind of review the market. First of all, GameStop is coming up off of its highs a little bit now. I kind of wonder. It's kind of funny. Like when I started talking about it is when this decline started, and I do feel that I should be some concern. If this was Citron, I'm still concerned about further upside. Okay. In the rest of the markets here in the treasuries, okay, so the treasuries saw that huge jump. It was actually a fairly mild jump. 20,000 contracts net. I'm seeing a little bit of buying here at the 12, but it looks like they've formed a pretty solid hole that they are stuck in. Okay. Japanese yen, they went. Let's check the Japanese yen here real quick because they've been struggling lately, right? Okay, so that's really good for the Japanese yen. The dollar coming below 104.5, also pretty good. Bitcoin jumping, but not to 70K. Gold and copper looking really, really good. And oil jumping on this news as well, although definitely not as much as any of the other markets. The biggest winner, though, up 3%, RTY. The small caps loving it, followed by silver. And what's down? Natural gas, wheat are down today. That's it. AO, you use NP. Is he talking to you? What are you buying? Oh. Yeah, he uses the jigsaw. Okay, whatever. I have no respect for your interest ladders. So what are my interest ladders? Are you talking about the inventory cost basis, perhaps? Below yesterday's 10-year auction gave you an easy read target as the end creep to target of the auction number. Below here. So yesterday, I don't know. I feel like that the auction yesterday was like a huge defeat for me. I mean, I didn't take a position. I hope that nobody took a position off of this, but my feeling was that the auction was going to be relatively poor because it was the day before the CPI and all of that stuff, and the auctions as of late had been really poor. But that was actually really, really good auction. So they really jumped, and if you come in, we can come and look at it yesterday. Here you can kind of see they were like just chilling just below the cost basis, and then the auction came and they just jumped right up, formed a liquidity hole for a while, and then continued up for the rest of the session. Oh, what are your ladders below your note ladders? You mean these ones down here? The yields? Oh, so what you're saying is you looked at the auction number and you looked at the yields and you were able to sort out a couple of things about where they might move based on the yields. Yes, that is the thing. That is the thing. So, I don't completely understand this though. So
Block sell.
When the auction happens, there will be a difference between the current yield in the market and the high yield from the auction. And this is where, when you hear people talk about a tail, or I forget what they call it when it's the other way around, but that's what they're talking about, is that difference, okay? Now, presumably, when the auction number comes out, they should move up to where the auction number was, okay? I've seen it do that, but not always. So it's like not a hard rule for some reason that they always, you know, that they're trying to predict what price the auction number will be, and they, you know, race to where that auction number is or something like that. It's more complicated than that, apparently. But it is still useful to watch with the auction, yeah. So, tell you what, that's a decent amount of volume that's traded at 11.5 now. Where was our original prices though? Like when I took that trade and everything, last was 110.11. Oh wow, like right exactly where I got out. Cool. So I actually got a really good exit. I actually got a good exit on that trade. Well, I don't anticipate the Federal Reserve being hawkish today, so I'm kind of thinking that, you know, there could be further upside later.
Block sell.
Block sell, huh? Okay, so I'm still stuck at if I showed you guys where. Okay, actually, we can do this. Okay, so the whole thing is, should I spend $70 to get the data so that I can show where the stops are? Well, you know, I would have to like put something in the title to see people come and yada, 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 right? So why don't we just put that in the title and see if people come? I don't think that they actually will. I can show where the halts in Gamestop are going to occur. Today is the 12th, by the way. Two. Okay, so I changed that at basically 7:05. So we'll see if we start getting viewers from it. If we start getting viewers from it, then I will pay for the data and we will show the halts. Not where the stops are, where the halts are. For $70, if I pay $70 for the data, then I can put a chart of GameStop up here that will show the price bands where GameStop would get halted. How did I do that, by the way? Where's my code for that? Got a couple of. So while I'm thinking about it, I'm like, did I do it this way or did I do it this way? Halt bands. So even if I set it on a chart for like a 1 minute chart, it should do it correctly. Yeah, we'll work on the indicator. Will work on all stocks. So the indicator is in Discord, so you can download it in Discord. But obviously, it's only pertinent to stocks. It's only pertinent to stocks, and I don't get stock data, and it's $70 for me to get the data for stocks. So I put the indicator out there so that if you have the data for stocks within NinjaTrader, you can run it. And I put, some feelers out to see if there's interest in seeing where those levels are. But I put the code out there so you can see. I'll just explain what it does here really quick. For every order, we are adding it into a queue. And then essentially what happens is we remove all of the items in that queue that are outside of our 10-minute window. So what we end up with is a collection of all orders in the past 10 minutes. And then we find the arithmetic mean of those orders. So it's not volume weighted, right? It's just the sum of all of those prices divided by the number of orders, okay? And then there is price bands. There's a percent, but basically price bands 5% above and below that. So if we get to those 5% price bands, you should see a halt. Now it's a moving target, right? Because it's like all orders in the last 10 minutes, and that 10 minutes is like constantly moving. It's like it doesn't move like a minute passes and then it moves. It's constantly moving. So, but you will see the level, and if this line catches up to this line, then you'll see it halts. That's the indicator. You can add it. We'll see if anybody. I don't know. So far, though, doesn't look like it. Well, let's just put the Gamestop up here for now. It looks like there was a slight recovery and coming back down. Oh man, this is like, the more that I think about this, the more that I'm like, that must have been Citron covering yesterday. Which to me is kind of like, gee, you should have covered like a long time ago, dude, but okay. All right. We'll leave it like that for now. Actually, no, let's leave it up. Let's leave it up. Shall we? There's some programming I wanted to do, but I'm gonna do it tomorrow. Is there a book map indicator for it? Okay. Like, here's the thing. There's not a trading view indicator for it. As far as I can tell, there's no way to do a for every order sort of logic within trading view. So it's not possible to create that indicator in trading view. And since like 99% of retail traders are using trading view for their charting, hence they don't know where the halt levels are going to be. Because if they were using a more serious platform, if NinjaTrader was the most popular charting platform out there, then they would all have it. And all of this misinformation about how the halts is a giant conspiracy theory to, stop price movement when it's disadvantageous for the hedge funds and yada, yada, yada. That wouldn't be a thing, because everybody would be able to go and load the indicator and see that it goes, when it goes to the line, it gets halted. Right? But whatever. I kind of think that the apes want to live in ignorance. Kind of think that they don't want to know where the halt levels are. An alligator pointing out that services. Let's see this little picture that he's got here. Electricity. Services, less energy services. Shelter is still higher than it should be. Transportation down. New vehicles down. Used cars and trucks down. Utility, electricity. Interesting. I don't know. Those numbers all still look pretty okay to me. Let's pop over to Zero Hedge and see if they have a story on it. Zero Hedge gives us good information, but they are straight up propaganda. They are straight up propaganda. Look at what's the headline this morning. Consumer prices hold at record highs, up 20% since Biden elected. Okay, well, it was less than anticipated. It's on pace to be towards the target. It was all good news, and the market absolutely loves it. So what are they going to do? They're going to focus on the, yes, but we still had a lot of inflation before. The headline consumer price index was unchanged month over month in May, the smallest change since July of 2022, just less than the 0.1% month over month expected. But very much stuck in a range well above the 2% target for over a year now. That is true. Energy was the biggest drag on the headline CPI month over month. CPI rose about 2% month over month, pulling the year-over-year change down to 3.4. That is the lowest core CPI year-over-year since April 2021, and it looks like that could maybe go to target. Okay. Core CPI has not had a down month since Biden was elected. Core services inflation slowed notably month over month. Shelter index increased spot 4% in May and was the largest factor in the monthly increase. Okay, but that's kind of lagged still, right? I think that we expect that to come down later. Services inflation remains awkwardly stuck above 5%, while goods inflation is at its weakest since January 2004. Supercore fell spot 5% month over month, its first drop since September 2021. Transportation services tumbled month over month to drag Supercore lower month over month. We note that consumer prices have not fallen in a single month since Biden's, well, of course not. That almost never happens, which leaves overall prices up over 19.5% since Bidenomics was unleashed, and prices have never been more expensive. That is an average of 5.4% per year. Since Biden was elected, food prices at home are up around 21%, and food prices away from home are up 23%. And finally, while the inflations have broadly tracked M2 lower, we note that M2 year over year is starting to turn back higher once again. Will the next Fed president and Fed head face a 70s redux? And is this guaranteed if Powell decides insurance cuts are required? Or Biden? No, I think that the economic data that we've gotten in the past month confirms the theory that the economy is weakening and that normalizing interest rates this year will be necessary to prevent recession. They complain about it. I don't understand. You'll have these outlets and they'll complain about the mainstream media and the narratives that the mainstream media tries to create and things like that. And then you create your own narratives. I mean, like, I guess I create a narrative too, but my narrative is this is the information that I think is going to be the most important for you for trading, right? The Zero Hedges narrative is whatever will hurt Joe Biden most, you know? It's just, I don't think that their narrative there is very useful for anybody trying to understand I mean, they have all of the data in there, so it's still worth reading because you can understand from the data, but their commentary is useless because it's so biased. It's a frustrating thing. Everybody has a bias, of course, but there's a certain level at which a bias starts to harm you, right? That's about all they got on Zero Hedge. Okay, GameStop did go lower and found a temporary floor again. I am seeing signs of meta order. When I start seeing waves like that, and this one is shorter, and then there might be a third leg before the open. That screams meta order for me. Why would you want to do that before the market opens? That might be somebody opening a new position. Like they're like, okay, Citron's out. That was the last person to buy, and now it's time to go short. Could be. All right. Well, we seem to have moved a little bit lower and formed another kind of hole here, right? It's interesting to me. I don't know if this is in line with what I expected or not. Because remember I was saying, okay, if the number is too high, then this would be really bad for the market. Otherwise, they'll probably rally, but then you might see it like fade quickly because it will be like, this doesn't change anything for the Fed meeting. Well, I guess you are kind of seeing that in that it is fading. It's not like coming all the way back though. So that's the question now is will they fade back across this huge gulf somewhat or not? Because this kind of looks more like, you know, huge buy, post meta order, regime change, and settle. And it, you know, they formed a hole, but now they're settling at the lower end of the range. That doesn't mean that they're going to bust out the bottom, but it's kind of on my radar now. Just me sitting here waiting for somebody to come into chat and say, oh, you can predict where the halts will be? Why don't you show me? And then I'll say, well, I have to get enough of you in here to convince me to spend $70 for the data. And then they'll be mad and they'll leave. I kind of wonder if, well, one thing could be that if you put GameStop in your title, maybe YouTube doesn't push you as much. Could be. But maybe, more likely, there's just too much competition for that name that I don't even show up. If I come over here, GameStop, and live. Okay. Well, this guy, beginning trading, I've never heard of him before. But he's got 1.4 thousand people watching, but he doesn't have GameStop in his title. Oh, look, he's using, that's Thinkorswim, isn't it? Oh, look, there's mine. 17. Yeah, okay. Okay. I can predict GameStop alts. Maybe my title is not clickbaity enough. What do you guys think? Do you have a better clickbaity title? I have this Halt secret formula, guys. It's not. Add Lambos to it. Funny, but I don't think that will help. Oh, how would now I'm sitting here thinking about how can I add that into the title? It's kind of like selling tickets to a concert, but you don't sell enough tickets, and it's like, sorry, I guess you get a refund. Yeah, that's exactly what it is. That's exactly what it is. I saw this interview with Deadmau5 this morning where he was talking about the old days. And it was kind of funny because he was trying to avoid saying back in my day, but like it really is. Yeah, I understand. Like electronic dance music is not what it used to be. It's complete. The entire character of it has changed. It used to be that you had to go out to some secret meet-out point where they would tell you where the concert was going to be, because it was all underground and illegal. But since then, everything has changed. The illegal raves are not very common anymore. You get big concerts everywhere. And, you know, you have some of the top artists like Buckethead, or what is his actual name? His actual name isn't Buckethead. But anyways, and the kids love Buckethead. So it's like all kid friendly. too. So like, it's not the same thing it was. But you would do that. You would like set up a concert and then you don't sell enough, you'd cancel it. Yeah. You've seen that happen. You've seen that happen. So it's very interesting to me. The treasuries kind of seem to have settled towards the lower end of their range here, but the S&P 500 looks like it's still plowing ahead. So it's kind of funny. I remember looking at some charts and we're some discussion in Discord, and we're like, well, if things went bad tomorrow, I could sure see 5,300 as a downside target, but like now we're 54.31. So I don't think that one's happening. So apparently nuclear missiles are close to us now. Oh, why? Because the Russians have submarines off the coast of Florida? Yeah, the Russian Navy is closer to me than you are. You know, this is actually interesting to me. The Russian Navy being off the coast of Florida is something that, if you put it in the headlines enough, would really get people riled up, don't you think? That's something that could really get people riled up. But you don't really hear anything about it. Like, of course, it's been reported. It's like, it's a known thing. Russia's putting it out. So, of course, there's going to be people out there saying this is happening and reporting on it. But none of the news networks prioritize it. So when it's something that, like, I think that the news networks could get tons of clicks and money from, and they choose not to do it, is always a little bit like, It is absolutely a thing that American news agencies get help or have a relationship, let's say, with the US government and intelligence agencies. And they do choose what to focus on and not focus on is influenced by that. So when you see a story that you think should be a big deal and it's not, you know, that's always going off in my head. Like, okay, so what do they and do they not want us to pay attention to? Well, they don't want people to be concerned about the Russian Navy doing exercises off the coast, right? Russia wants to get everybody riled up from it, and they don't want you to get riled up about it. Not saying, you know, it's just interesting that that's how it works. I don't think that it's useful to us. I don't think that it means anything particularly interesting right now, other than it's interesting to see the way that the news media reacts to it. You know what I read that really alarmed me yesterday, though, was we're giving Ukraine F-15s or whatever, and they want the F-15s to be housed in Poland, I think. So, like, they're going to have the planes are going to be in a Polish airbase, and then they're going to go out and do stuff, and then go back to the Polish airbase, so that they're safe from Russian counterstrikes. That kind of sounds like something that's almost destined to cause a problem, right? Because the Russians, they don't have something like that. They don't have a safe place they can put all their assets where they're not going to get hit.
Block sell.
I think Putin is looking for another deal, like during Kennedy's deal. Yeah, well, I think when it comes to Ukraine, I definitely. Oh, it looks like they're extending the value area here in the 10-year. By the way, ECB's Guindos is talking, but we're getting a pretty good, decent meta order coming through. About 10, well, more than that even. Maybe I should have taken a trade off of this. I mean, I kind of noticed it at first, but I didn't expect it to expand here. So that was maybe a missed opportunity that wasn't on my radar. Okay, anyways, I see some signs that Russia does want to make a deal. I think that this war is being very, very painful for Russia, but I think that there's a little bit of ego involved, and, you know, they've got to get a deal that they think is appropriate. So they think that they should win the territory that they've conquered, basically. And there's no way that the West is going to agree to that. So I don't know how you get a deal. And I really, at this point, do not see a total victory for Ukraine. There was a time, like before they did their big push, where it was like, hey, Ukraine could pull this off. You never know, right? But when that failed, I think that completely defeating the Russians seems unrealistic to me. Completely defeating them seems unrealistic without, like, the West getting, like, way more involved. And so now you kind of have this more of a stalemate again. And I'm kind of concerned that the way that Russia and or Ukraine decide to resolve the quote-unquote stalemate is to get other parties involved, you know? Something just kind of in the back of my mind. I don't know how serious of that is, but well, they're giving up those last few ticks pretty easily. Wow, GameStop started out trying to buy it up and they just got hammered down. I don't think they've been halted yet. Okay, looks like they saved it there. Millennials are pathetic AF. As we become the majority demographic, we collectively just like don't care. Nuke us all. Life sucks anyways. It's also have you know what, something that really irks me lately? I know that, stick with me, this is gonna seem like super left field, okay, but I promise I'm going somewhere with this, okay? Something that really irks me lately is that South Park is on Paramount Plus. I don't want to get Paramount Plus. I'm not going to buy Paramount Plus just for South Park, as amazing as it is. I refuse. There's so much other trash on that network. I just don't think that it's worth it. I'm not doing it. I already pay for too many TV network streaming services. It pisses me off. This just like cable, you know? Stupid. It's stupid. I hate it. I'll pay for Disney Plus because the kids like cars, and I'll pay for Netflix because Netflix is the OG. But the rest of you can just F off, you know? Okay. Well, there was a recent South Park episode where Stan is visiting his grandpa, and his grandpa decides to buy him some sort of like, one of those things you put around your neck that has like a stone on it and all decorative cowboy sort of looking thing, right? He gets him one of those things. And he's like, oh, I just bought that. They don't like it. And he's like, what? I just bought that for like $6,000, right? And as the episode goes along, you find out that all of the old people are sitting there watching like the shopping network, and they get confused by what's going on the shopping network and decide to buy these things because they think that that's something they can leave for their kids and their grandkids that will have value. And then they the kids and grandkids just turn around and sell it to like cash for gold for like practically nothing, and then that gold gets melted down and goes back over to India, and then they turn it into these things and they sell it again, right? And it's just like this endless cycle, which is kind of what's happening in the economy today. like honestly, it's really weird the way that the demographics in the United States are kind of going, because the boomers are getting old. The boomers are getting into retirement ages, and they are like not letting go, and especially when we think about like the people that are even older than that. Like, I think in South Park, you maybe consider his parents boomers, and then the grandparents the greatest generation. But what are the boomers doing with their grandparents? Like in the South Park episode, Grandpa just lives in this nursing facility. He has like nothing there, and basically all he can do is sit there and watch TV all day. Because I kind of think I don't want my parents to ever have to live in a facility like that ever. I guess if they insist, and there is going to be a point where you need enough medical care. Okay. But no, if you're just going to sit and watch TV all day, you're going to do it at my house, right? Where there are going to be young people and there's going to be kids, and you can be telling kids things and passing information along. That's the way it's supposed to be. That's the way it's supposed to be. And the boomer generation isn't doing it that way. They seem incredibly selfish to me about the way that it's going, and so kind of what I'm seeing is like the resources are not distributing down to other generations the way that they typically do, in the way that would probably be best. So for my generation, I think what's happening is when you get into like your 30s and 40s, that's when like I think you want to be the boss. You know what I mean? Like that's when people you start to feel confident in what you're doing and in what you believe, and you get things done, and that's like your peak earning years, and right? And millennials aren't being given those opportunities because they're still held by boomers. At some point, all of the boomers are going to die. Millennials will be all that is left, and they won't know how to do any of this stuff because none of that information got passed down to us. Like, there's the boomers actually did a lot of, we make fun of them for being selfish and all of these things, but the economy grew a lot under their watch. Like a lot of great things did happen. And I kind of feel like that we're going to lose all of those gains because we're just stupid and short-sighted, You have extenuating circumstances to consider. My father-in-law is a worthless, filthy drunk, and I wouldn't let him live with us. Neither would my wife, Olive. See, if I thought that my wife's father was a useless drunk that I didn't want around, I wouldn't have married her. That, I guess the way that I think, because in my world, I don't know, is this not the way that it is in most parts of the United States? In my world, you do, whenever there's a big holiday, you usually do it with the relatives. There's grandma and grandpa, and then all of their kids and their grandkids, and you've got all of the cousins, and you're all getting together on a regular basis. And if I hate one of them, especially the grandma or grandpa, you're gonna be around them a lot, so you wouldn't want to get into that, like, I'm 20 years deep, Mr. Previously divorced. Yeah, well, I really liked my father-in-law from before. Well, we hang out with father-in-law so much. My wife's parents, they live in Oklahoma, so we don't see them very often. My marriage is closer to normal. Yeah, well, I'm not trying to make this an insult or anything. I'm just kind of saying it's the idea that you would not want your father-in-law around seems so very foreign to me. In Utah, having a shitty father-in-law would, well, I mean, I don't know. That's privileged? Is that what it is? Is it privilege? Maybe. I mean, if both mom and dad were shitbags and I didn't want them around, I would have a hard time marrying that person. That's sad. We didn't all grow up in religious cults. Yeah, that's what it is. It's a religious cult. It's so weird to me because I look at a lot of the problems in society and the way that things are going in some places of the world, and it's like, well, that's not what's happening around me. Why isn't everybody just doing it this? Like, that's the way that we used to do it. We still are doing it, and we're fine. Did they just get altered? I don't think so. Nope. They're probably getting close, though. Oh, that's sad. Wife is a better person because of what her parents were / are. Her mom's dad, but her dad may as well. But, I guess this whole scenario isn't really applicable to you anyways, because you don't really have kids, right? So, like that's the big thing for me, is, like, so there's a lot of talk about this in evolutionary psychology. Like, why do women in particular become infertile and then continue to live for like 40 years after that? That makes no sense. Why is that? And so their guess is, oh, because then she can help her offspring raise their offspring, and that it's good to like have all of that knowledge that continues to get passed on, and that's where it comes from. Like, they see that with elephants. There's like the grandma, she knows where everything is and the paths to take and everything, and she has to teach it to the younger generations. And humans do the same thing. Whereas with the men, it's just like, well, that's just another competitor for the dominant male, so it's okay if the man dies. It kind of seems to me that, like, when you're an old man, once you get to like retirement age, nobody cares about you. You're useless to society or something. Is kind of stupid. That's the way that people treat it. But the whole thing was it bothers me the way that I kind of see this retirement with boomers going, and the way that I see this like passing the torch on to millennials going, right? That was the point of that. Because we were saying that like millennials, we've become apathetic. Well, I think that we have. And the reason why I think that millennials have become so apathetic is because whatever it is that we care about, it doesn't matter, because we're not in charge of anything yet. Right? So like, you do get animated about an issue, you want to go and change it, and the boomers are like, nope, we're not changing it. We're not doing anything right. You have to wait till we're all dead, and then maybe millennials, you can change something. But like, when the millennials get the chance, I don't think that they're going to be able to, they won't have the skills to do it. Because we're so apathetic, you know? Dude. The way you talk about your kid's neurodivergence, you're going to be in for a effing sling as they age, if you want to be real. So I don't know what you mean by an effing sling, but it probably is going to be a huge burden for me. Like, the youngest one is fine, but Asher is possibly level 3 autistic and will need support his entire life. Yes. In fact, there could be, you know, it kind of depends on how he develops and stuff. So, you know, I try to be very careful, but, you know, there's a point. If he was an adult, like, the thing is I can pick him up and throw him and stop him from doing whatever he's going to do. All right. If he's like a 20-year-old person and it still behaves the way that he does now, that's going to be a problem. Like, I might not be able to keep him at home, at least not without help. That's how bad he is. So you're right. It's going to be a huge burden on me. Well, I don't know if that's what you were saying, but if that's what you were saying, it is going to be a huge burden on me. And this is the other thing. This is the other thing that's coming for millennials, man. If you're a millennial, prepare yourself, my friends, because it's coming. Because if you have kids, about the time that you are paying for your children to go to school and paying the absolutely insane prices for college that we continue to do nothing about because we want to give everybody loans, and it's just so dumb, but whatever. Okay. At that exact same time, your parents are going to start having medical problems. And so you get squeezed from the dual costs of your children's schooling and your parents' healthcare. And for a lot of people, you can't afford either of those things, right? And so your parents don't get very good care, and your children have to take on debt to go to school. It's coming. And a lot of millennials are going to be really shocked when that comes. I can't even afford my own medical care. Yeah. I have a friend from my weightlifting. They're not really. They moved to a different state, but they like broke their ankle or something like that. Like, they're on crutches right now. No, not on crutches. They have a cane. And she said that it was like $4,000 so far for it. So most millennials cannot absorb a $4,000 cost like that. So I have in my elbow a bone spur. I think that when I was like 19, I smashed it on something. And there was a couple of different things that maybe happened, or maybe all contributed, but I probably should have gone and seen the doctor, and I didn't. And it's been so long that I don't even remember what it was or what the situation was or anything, but I just kind of like dealt with it, right? So I think that piece broke off and then kind of reattached and created a bone spur. And when I was lifting on Saturday, you know, I had a lift that kind of was getting away from me a little bit and kind of hyperextended my elbow, I think. So my elbow was all acting sprained. But it seems fine, like it moves fine. And for the most part, it doesn't feel any pain until I'm lifting. So like on Monday, I went hardcore, and then until I literally, the arm didn't want to move anymore. This is what getting old is, huh? I'm now to the point where you need ibuprofen to get through workouts and stuff. I take really, really good care of myself, but I don't think that I have as durable of a body as other people. So, a couple months ago, it was bothering me. I think that I was like leaning on, I was resting my elbow on the chair and, doing this sort of a thing. And so it was started flaring up and started hurting me. So that's when I went in and had it x-rayed and found out that actually like there's a huge bone spur there. Because I always thought that maybe there's a floater. I could kind of feel something that's moving around. Like this elbow does not feel the same as this elbow. So like something's happened, right? So I took an x-ray and they told me that you can do surgery to fix it, but that there's so many muscles right there that we would have to move out of the way and or cut to get to it, that it would not be worth it to do the surgery unless it was really debilitating you. Yeah. I'm not sure if the recent episode that I have is that bone spur causing inflammation as I'm starting to get more active again, or if I actually did sprain the elbow and didn't really realize it. Because it does feel and is acting like it's sprained, It's like that dull pain. It's like a dull pain and you just don't want to move it, sort of a thing. Help me understand where you think the chart is going based on the numbers. Well, that's not how you determine where the chart's going. My expectation is that the market is going to like the Federal Reserve meeting today, but the S&P 500 has extended upon its gains already. So I'm kind of wondering if it's not all already baked in before the meeting. In GameStop, the big thing that we got is that retail traders were kind of seeming to lose interest a little bit. And then we got this insane rally towards the end of the day yesterday. This morning, Citron Research has posted that they are out of their short. That they were short and they dumped it. So I kind of suspect that this meta order, this trend here, might have been Citron getting out. So if that's the case, the retail traders, well, they made a pretty good run there, but there is like two sides to this action in GameStop. So anything could happen, but I'm kind of leaning a little bit on the bearish side this morning. Now I'm trying to drum up some interest in my indicator that will show you where the halts will be. So I've written an indicator for NinjaTrader. You can download it for free on our Discord. It's linked in the video description. I could show it to you guys here on stream, but I do not get stock data in NinjaTrader. You notice I'm showing you this GameStop on TradingView. I could buy the data for stocks in NinjaTrader, but it'd be about $70. So I'm trying to see if there are enough people interested in seeing it for it to be worth it to spend the money on the data. But so far, it looks to me like there's not the interest, or if there is the interest, I am not able to get high enough on the list to attract it. I'm sick. I took ZN over ES this morning. Should have taken both. Yeah, I don't know. I mean, it's still going from 11 to 16. That's 10 ticks. You can't be unhappy with that. And it might continue on. Kind of depends on how you're levered, I guess. So I don't think I've actually seen a halt in GameStop yet, by the way. Because he was saying, yeah, I've had that before. I don't know what you're talking about, my elbow being sprained. Yeah, we'll see what we do today. Yesterday, I took an ibuprofen, and I don't think it really did anything, to be honest. And I did the Tiger Balm. Tiger Balm kind of makes you feel like icy hot feeling on your skin and will get more blood flow to it. Yeah, ice becomes your best friend. There you go. So we'll see. We'll see if I've recovered well. What do I have on my workout today? By the way, like Monday is the hardest workout. So I'm kind of mad because like I was really into that workout and then I had to cut it short. Snatch block, snatch extension, snatch pulls. And the snatch blocks are only 6 sets. So not nearly as much. Yeah. Not nearly as much overhead work today. Tomorrow, doing jerks, that might be. But that's different from snatches, and snatches what hurt me, so I think that I should probably do okay, as long as it doesn't really flare. Tiger Balm was very popular in the old days at my gym. Jim was a hardcore pro. Yeah. I remember people talking, like my coaches talking about, like when you get old and you need Tiger Balm to make it through workouts and things like that. And I'm like, oh, I hope that never happens to me. And it's way too soon. It's way too soon. These treasuries, they're on a good tear here on this latest meta order. How far are they going to go? They've gone much further than they typically would. I guess there was a break. There was a break at 14.5. But there's a really strong meta order coming through a bit. I'm kind of wondering if I'm being silly by not jumping on board it. Where were they before? I don't know. I'm kind of looking at the numbers though. Like, at what point do these interest rates get too low that it's a problem? You want to keep going just to prove to yourself that you aren't decrepit, but you do need breaks. Yeah. I guess one of the big things that drives me right now is that I really don't feel like I have maxed out my potential. Obviously, I'm not an amazing weightlifter. I not have like kind of the genetic gifts and things like that. That's really quite the opposite. I can snatch my body weight, but my understanding is that you should be able to snatch like a certain percentage of your back squat, and I'm like way under that percentage. So like I should be able to get to like 80, if not 90 kilo snatch, and I'm not anywhere close to that. Now, when I was in this last cycle, I was feeling good, like I was getting a lot more power out of my lifts and everything, but then the technical flaws in my form really came out. So I think that I've kind of like narrowed in on those and are fixing those, and so I have high hopes for being able to make a new PRs at the end of this cycle, but we'll just see. But like that's the thing that's driving me, is like I want to go in and get those new PRs before it's too late. You know what I mean? And I don't want to ever get to the point where I can't do it anymore, because it is kind of a thing that, like, your body wants it. You don't feel good, you don't feel happy if you're not regularly doing the workout. I've never gone a whole week without doing it, without having some sort of workout. I have been lighter over the last 4 years because of, you know, helping with kids and stuff, but this time I was able to get through all the workouts and everything, not missing workouts, working out on Saturday. That's another thing, is I would miss Saturdays a lot. You know, I want it, and I feel like I have an opportunity, and then things like the elbow starts coming along, you know. So there's that side. I don't know. Once guy lift a power lifter with one arm. Okay. Well, I'm just noticing, by the way, you know, the treasuries have pulled back like a tick or two, and these micros moved back way further than I anticipated. I know weightlifting is generally low impact, and part of the thing is just that you know, we train really hard, so there will be a point at which I'm just given lighter workouts, I guess. Could be fine. I don't need to worry about it. And I think that the arm will recover. It shouldn't take too much. It feels pretty great right now. Only really hurts if I extend it, and it's not like huge pain. It's just like there's still maybe a little bit of inflammation there. Fine. I don't need to worry about it. Yesterday, it was, or the day before, it was natural to be worried about it, but it's recovered enough that we should be able to work past it. And then in a few weeks, it'll just be a memory. And, you know, it'll be fine. As long as I don't do anything dumb. I think I'm way more concerned about, like, at what point am I the guy that has to step up? I'm the one that's been around long enough. I'm the one that knows enough. I have to be the leader, and will I really actually be prepared to do that? Because at the moment, I don't think that I know anything about that stuff. That's really the thing earlier we were getting on, right? That's where I think we're kind of headed. Some attempts to kind of push it a little bit further, but some signs that we're kind of forming another bit of a hole here at 17. So it is slowing down. It will probably become more and more difficult for them to continue pushing these highs. I guess what I'm saying is that at this point, I really think that the opportunity is lost. Really should have been in at like 10. I could have caught something at 10. That would have been a great trade, but I think that the opportunity's passed. Maybe after FOMC, there might be some movement, but just build things to leave behind. I don't know what. You know, so that was one of the things in the South Park episode was that the old people were buying these things like the jewelry so that it was something you could leave behind for the previous generation. Because there was a time when, like, you know, jewelry and things like that were valuable things that you would leave behind for people. Except for that you don't get your resale value out of them anymore. I don't think that's as big of a problem for me. Every day that I have ever been here in the market is recorded. And I'm pretty confident that the videos on YouTube will be there forever. Is that crazy? Is that a crazy expectation? I mean, maybe it happens and like they start purging old videos or who knows what, and that would be like a big controversial thing. It could totally happen, but at this moment, I feel pretty confident that the videos and the live streams that we've posted here on YouTube will be here forever. And so my grandchildren should be able to come and watch me trade and learn everything that I've learned from doing this. And pretty powerful things that we've learned here that people could benefit, especially if you get into it young. I feel that I am laying the foundation that my grandchildren could become billionaires if they want to be. At what new changes have ruined so many older videos? Like, I can still watch videos from 10 years ago. I still have videos like of songs and so forth that I regularly watch that have been in my playlists since like the very beginning of YouTube. Be okay. As long as the audio is there, I think we're okay. And, you know, I've done pretty good on the savings and everything, and my parents have done really well on the savings and everything, so there's definitely going to be money for them. I'm hoping that I will be able to be in a position that, I want to be in a place where my kids can take real risks, you know? I don't foresee any of my children being like, hey, I want to start a business. I need $10,000 or whatever the deal is, right? But like a Jeff Bezos sort of a thing. But I want to be in the position where if it happens, I'll be there, be ready for it, right? Right now, the focus is be able to pay for school, though. So. Our grandchildren will be renting rations and stuff. Oh, I don't think so. I guess if older videos were like hammered so that like you couldn't read the numbers anymore, that would really suck. But and the cool thing will be is that by that point, I think that the AI will be sophisticated enough that you'll be able to make AIs that just can go through every video, watch every video, and pull out the best stuff and give you the best of speculators. It'll be great. My grandkids will. My grandkids will see us talking this very moment. I think. Great grandkids. That kind of gets into this interesting thing though, where it's like, you know, like if you're a kid, you go back like 4 generations, you start to get to so many people that were involved in your genes that you can't keep track of them, right? You can't care about all of them. So you are going to be forgotten to some extent, right? But you gotta, and that's the thing, is the transition. This is the thing that like the boomers don't seem to know or care about. This is like how you transition the resources really matters, because otherwise it just kind of evaporates. One thing is, well, you don't want all of it to go into end-of-life care. For sure, that's the thing. But that's why I'm like really shocked that there's not more grandparents living with their kids. Like, I think we've gotten away from that because there's this idea that like if you're living together with a, you know, that you're not supporting yourself, and it's not supposed to be that way. But kind of seems to me like it's to your advantage to live with your kids in their old age. I'm probably living with Ethan though. I don't know if I trust the other ones. Too early to say anything like that. None of my kids are that old. You change so much when you're in your 20s, right? Oh my gosh, if we got into a world where it was like, you know, nobody owns a vehicle and you have to take government transportation everywhere, and I hope that's not the future in store for us. Or like a world where you don't own a car, you just own a car subscription service. Yuck. No thank you. No thank you. They're coming back down. I don't know. With the kind of meta order that we were seeing, I don't think I should expect us to be coming back as much as we are, so. I don't know if that really means anything other than that I don't completely understand what's going on now. And what about Gamestop? Well, there was a little bit of downside and then a really big upside, and then they retraced most of that, and now we're going mostly sideways. I would say though, it's balancing around 30 pretty well, so I'd say that that's still advantage apes. Yeah. Can't be sure if this supposed meta order will continue in the future. Well, I mean, I guess what I'm saying is like, we had a meta order. You get post meta order like regime change and like things flattening out. But what I'm getting is downside that's more than that. So I'm not 100% sure what's driving these. I am seeing the Japanese yen coming back down a little bit and the dollar rising, so it might be the dollar. I'm concerned about, you know, this rally can only go so far because this doesn't really change anything from the Fed's perspective. I think that the market should be happy with the trajectory that the Fed is heading, but like, it can only go so far, right? These rates can only get, you know, the rates get too low, it starts to become a big problem. So there was a point at which I think you could have made the argument that maybe I can buy it in this area and there will be another leg, but this most recent action makes me really doubt that now. Or at least makes it fuzzy enough that there's no way I would be taking a trade on it. And it makes trying to game out what's going to happen for the Fed meeting today really difficult. Really difficult. I mean, he could say something that just really upsets the market, right? And just causes all of this to retrace. Totally within the cards. Right. I'm hedging here on this because my overall read is that the market will probably be happy with the Federal Reserve meeting. It's just that we've already moved so much, so can it really go much further? I think you could see 20.5 at least, though. But CPI was so huge, I don't know if the Federal Reserve meeting is actually going to be that meaningful to us. Let's see. Let's just take it as it comes. The big thing that I tell you, and by the way, we're going to be on NinjaTrader later today, like around the Fed meeting. So like I'll be there just before the Fed meeting, and then I'll come back over here and stream for the press conference. Okay. But the big thing is that we are going to get the dot plot and economic projections like the SEP. So that is going to be the important stuff to look at and that's the game plan. What do you mean in NinjaTrader? What are you talking about? I didn't say anything about NinjaTrader. Oh, on their channel. Yes, sorry. They have a live stream channel, and I will be a guest on their live stream like 15 minutes before the Fed meeting. Yeah. So I'll do their live stream, and then I'll come over here and start streaming so that we're here for the press conference. Yeah, well, it'll be the 4th time that I've been on there, so. Wish I had been on like just before the CPI so that I could have given people, you know, the insight into the CPI, because I think that we had a pretty good call. It was a pretty easy call this morning, and it worked out about as, you know, it's been rare that I've been able. I'm not going to say it's rare because actually it does happen a lot, but it's usually just not so clear where it's like, okay, here's what the projections are and yada, yada, yada. I think that the number is extremely likely to be in line or lower, and the market will rally off of that. So we're just going to take buys here in the treasuries and gamble on us being right. And it was, and then I got out at exactly the right price too. And it was good. It was a good trade. It was Zim, but it was a great trade. And, you know, NinjaTrader is just an opportunity to share that information with more people. The critical drinker hates the acolyte. Okay, well, but have you heard about episode 3? So I don't know if this is as infuriating as people are making it out to be. So basically the leaks have always been that episode 3 will upset people so much that it will just change Star Wars forever and yada yada yada. And I haven't seen a full synopsis of it. I was kind of reading stuff while I was eating breakfast this morning. But the gist of it is this. In the episode, there is these witches, the dark side of the Force witches, that do some sort of witch ritual where them and a group of people all say some sort of stupid chant that's super corny. And people were showing the video of that. It did look super corny and stupid and not really fit in with Star Wars. And they use this chant to impregnate a lesbian couple with twins. So that's the thing that changes Star Wars forever, is that dark side users can use the Force to create life, and they used it to get a lesbian couple pregnant and have twins, which is the twins in the Acolyte show. That's the thing. That's the big thing. So you're going to see, well, Critical Drinker, he had videos about the first two, and he's been doing like one for each video, and a lot of those kind of guys have been doing that, like episode by episode. So if you're into that drama, look for the videos about episode 3. Who watches that stuff? I don't know. From what I've seen, not very many people watch it. Like, Disney has been making a big deal. Let me tell you something, man. The astroturfing on this stuff is insane. Okay? Disney, without question, it's proven, pays people to shill and try and push the latest series. And they're particularly involved on this one. Like, they, for some reason, well, I guess because the Acolyte is kind of woke, they've chosen this one to be the one that they're really going to push. Like, they put more resources into it, they put more money into it, more time into it. Basically, they rushed the Obi-Wan Kenobi series so that this Acolyte show could be better. Do you believe that? And yet, even less people are watching it than watched the Ashoka series. So, like, it's not doing well at all. And something that I'm noticing with this Acolyte thing, I feel like I'm way too tapped in. Like, I don't care about Star Wars that much, but like, it's there. I have nothing better to do, and I am tapped in, and I read the books as a kid, so I guess I have like a really good base of information to draw from. I don't know. I don't feel like that engaged, and yet I know so much about it. So I guess I am super engaged. But yeah, there's a lot of people like trying to say, or you're gonna see like there's review bombing both directions basically. And so like anywhere you go, you're gonna see people that when they say it sucks, there's gonna be a bunch of people like, oh, I thought it was really good. I don't know if you can trust all of those, you know. But what was I gonna say? The thing that I'm noticing with the Acolyte though, that is really, really like huge red flag to me, is that the people that were previously like, oh, the sequel trilogy is not so bad, Disney Star Wars is not so bad, I kind of like this thing and I like this thing, those people are coming out and are saying, one, this show is really bad, and two, I don't like the way that we are being treated. Because the PR for the Acolyte, like the interviews before the show came out, was basically the director and the lead actor like insulting Star Wars fans. It was basically like, haha, we're gonna make this piece of crap that you're all gonna hate, and we're gonna make so much money off of it, and we don't even care about the series at all anyways, so F you. So those few like true, like you would call them like all the way fans that have been with it all the way, even through Disney Star Wars, are starting to turn their back on it too. So Disney is really up this time, I think. And meanwhile, there's all of these bots trying to push it. Yes, it's a big deal. If you're into that stuff, I would go and watch the YouTube videos about episode 3. If you're into that kind of drama, because there's going to be a lot of drama about it. I only just saw the synopsises this morning. It's coming, man. I'm telling you, it's going to be, there's going to be weeping and wailing and gnashing of, this is the biblical term. Do you trade? No. Not in the summer. You know what? I do trade during the summer, but I'm really selective. And with both these CPIs and CPI non-farm and Fed meetings have been so volatile that I don't feel comfortable taking trades in them. Let's see what tomorrow we might get a good trade. So. Not into that drama. I used to follow the critical drinker, but eventually got tired of him focusing on all the negative stuff that goes around. Rather have someone focus on the good stuff. Well, you know, so the critical drinker in particular, it's kind of interesting that you mention him because he really has become the focal point, hasn't he? I really trust his reviews. You know, if he says a movie is bad, I don't go and see it. And if he's excited about a movie, I go and I see it. And he does post videos about movies that he's seen recently that are positive. So I wouldn't say that he only focuses on the negative. But my criticism of him would be that I kind of feel like he's almost becoming a parody of himself. Like, I generally know the opinion that he's gonna have. If it's a piece of media that I've seen before him, like, I can predict pretty easily what he's going to say about it, the kind of jokes that he's going to make, and a lot of the jokes that he makes are kind of like unnecessarily controversial. So you know, I'm glad for what he's done. I'm concerned that, you know, people are gonna get sick of it though. What I mean is I don't need a 10-minute video on how and why a show sucks. Just tell me it's crap. Well, yeah, that's not if it's a YouTube video, it has to be 10 minutes long. Otherwise, it's not long enough to get enough ads in there to make any money from it, Lucas. The way it works. Man, we really need to find new ways to create incentives, especially when it comes to online content, online incentives that actually drive people towards the things that would be best for society and best for the viewers and things like that, rather than this just whatever makes me the most money from ad revenue tripe. I'm so sick of it. But I do think, actually, I think I should go stronger here. Okay, look, I'm a conservative. I believe in real conservative values, not just anti-government values. Like, the government is too big, okay? But I'm conservative. I believe that the systems that we have built up are important. They're difficult to build. It's difficult to build good systems. We should keep the good things that we have, and that progress should be, you know, bit by bit and very intentional and well researched before we do it. That to me is real conservatism, because conservatism today in America has just turned into I hate the government. Okay, well, the Federal Reserve is a good institution. It's been around for almost 100 years and it has been very effective, and we should keep it, just as an example. Okay. I'm a real conservative, and so I want to see conservative causes do well. And one of the things is that conservatives have lost the culture wars, and I think that you're making good strides here and pushing it back against some of the crazy things that the liberals are doing. But conservatives, please be careful. Please be careful here with this, because you're going to go too far. You become too much of a parody of yourself. People are going to tune out. People are going to tune out. And another thing that I constantly see with, across the board, but I'm starting to see some of the conservatives fall into this trap as well, is that you start doing well and now all of a sudden everybody wants to know your opinion about everything. Stay in your lane, please, conservatives. If you are a strong, successful, conservative content creator, stay in your lane. My lane is kind of big because it's finance and it, you know, news, and so we're going to be following everything that's going on, including developments in culture. We can talk about them, okay? But there are some things that I don't really know a whole lot about that, you know, we have to be careful about where we're kind of presenting. I know one of the things that I see very frequently is you get these conservatives that all of a sudden they want to talk about finance, and everything that they say about it is just complete bullshit misinformation. They have no clue what they're talking about. So you got to stay in your lane. Let's hear. So we should recommend shorts for your demographic. 2-second video that just shows the movie title and says yes or no. Star Wars has been a consistent hard no for you. Really, since the only good piece of content Disney Star Wars has produced was the Mandalorian seasons 1 and 2, and that's it. Everything else has been either mediocre or complete trash. And it really seems to me, I don't know, remind me in 6 months and we'll see where we're at, but it really seems to me like the Accolade is kind of reaching a new breaking point. Just like, you know, when it was The Force Awakens, was it, you know? And there was controversy about it. Like, look, I think that some people are not as critical or discerning, you know, and so they go to a movie and like there's decent enough action and everything, and they're into it. It's fine, right? And then you add on top of that the influencers and people online that are paid to praise the, you know, and so yeah, there was back and forth with The Force Awakens, right? But then when The Last Jedi came out, that was such a disaster that pretty much everybody was like, this sucks. And yeah, right. That was a key breaking point, right? I think that the Acolyte is another key breaking point of that nature, where another pretty large segment of the fan base is turning off enough that it's like a real concern for Disney. It's like you've got to fire Kathleen Kennedy, or if you can't, sell it back to George Lucas. Seriously. Because they've done so much damage to it at this point. It's like a real, like, investor concern, you know? It's wild how you could just let billions of dollars go so a bunch of resentful white women can self-insert themselves into everything. I mean, I think that's an interesting theory that kind of requires us mind reading to verify. But it is very startling to me that they haven't fired Kathleen Kennedy yet. I suspect that they had some sort of a deal, like that part of the deal with Disney when George Lucas sold it to Disney was that the person that he chose, which was Kathleen Kennedy, has to remain in control of like the artistic decisions. And it just happened that George picked the wrong person. But I think that's what's going on, and that's why they haven't fired her. You think they don't know they are trolling fans with this? They know it's crap? Maybe. I don't think that the people in charge actually care, though. Like that's the thing, is that all of the producers and stuff involved in this don't really seem to be real fans and don't care about what kind of long-term damage they might be doing to their franchise. They don't view it as this beautiful, living, breathing thing that's sacred and should be, you know, kept of high quality, and they don't care. It's just like money for them. And if it like permanently ruins Star Wars for a group of people, they're like, oh well. But it's to the point where, you know, like Disney's been down as of late, hasn't it? I gotta go to a 1-day chart. Yeah, it has been. Like there was this kind of this rise because of the shareholder fight, and those people that were trying to do the takeover, they made money off of it essentially, and now with them gone, it's on the downturn again. And what I'm saying is I think Disney's got some real problems. I wouldn't just go straight up short Disney. I would like hedge it against something else, but I'm not hot on Disney. The thing that annoys me about Star Wars is that it should be something I would like, but they make it terrible. I keep looking down at the clock and I'm like, well, so first of all, I don't have my 11 clock turned back on. So I'm not getting the big clock. Let's fix that. Okay. But I keep looking at it like, is it really only 8:30? Because I feel like we've been talking about this for like an hour. We've apparently only been talking about Star Wars for like 10 minutes. Oh, did the treasuries did go higher there at 18.5, huh? I'm still not seeing the kind of the patterns and flows that I would want to say, so it's confusing. Whoa, oil is getting hammered here. Oh, it is Wednesday. I guess they didn't like the inventory report. Oh yeah, it was a much larger draw. The inventories was a huge build when they were expecting a draw. Build of 3.7 million versus a draw of 1.5. That's what's killing oil. And that could be why the treasuries here are rallying a little bit. Ah, okay. So it was meta order, host regime pullback, confusion, oil. And maybe that one comes back, we'll see. So that actually shouldn't be like pulling me into a trade or anything. It does look like that I could have maybe made $10, but I don't know if it's worth it. I should be taking more trades though, guys. I really should. I don't want to like force a trade, but next time that I think that there's an opportunity and I'm like, I don't know if it's too risky, I need to do it. It's too late in the session now to be thinking like that, but tomorrow we might have some opportunities. So tomorrow we should take them. I should repost this thing. So, by the way, so I'm going to be on Ninja Trader's live stream. That live stream is up for like Ninja Trader customers only. So just so you're aware. You have to like log into your account to get into the live stream. Okay, so Zero Hedge has a story now. Wall Street reacts to today's dovish CPI shocker. Oh, Roaring Kitty posted a new tweet. Okay. Just another meme, a video from, what's that? Quentin Tarantino movie about World War II. It was from that. Well, checking here to make sure that Nikki Leaks didn't say anything. I don't think he did. Okay, I'll read the Zero Hedge story. I feel like that the music is a little bit too hot. Let me turn that down just a As we expected in our preview, calling for optimism for a low print, today's CPI delivered the kind of downside surprise that bonds and bulls and the Fed have been waiting for, as both headline and core came in a tenth lower than expected, largely driven by a 3.6% drop in gasoline prices. The biggest reason why the headline CPI was flat on the month, and as Bloomberg adds, the miss looks legit given the shortfall in the actual indices relative to forecast. Indeed, at 0.16%, the rise in core nearly rose just 0.1% when rounded. Meanwhile, in what may have been the biggest surprise, Supercore Services ex-housing fell by spot 0.04, the first negative reading since September 2021. The soft CPI print puts two rate cuts in 2024 as the obvious center of the policy distribution, with an outside chance for the Fed to keep its 3-cut baseline in today's dots, and opens the door for the market to price in more in 2025. Meanwhile, the big delta remains housing, as the BLS noted the shelter index increased 5.4% over the last year, accounting for 2/3 of the total 12-month increase in all the items. Less food and energy index, yet with lagged OER shelter rent still hot relative to real-time prices, the core monthly CPI gain undershot the median forecast for the first time since October. And here is the punchline. With real-time rent flat to down for the last year, the BLS tracked OER 5 months lagged is up to 5.6% and will decline gradually over the next 18 months as it catches down to real-time rents, even as the latter are actively rising, something which Omar Sharif at Inflation Insights agrees with in his morning note titled Down and Out. At 0.2%, monthly core CPI reading should be a base case for the balance of the year, especially as it looks more and more like the long-awaited slowdown in shelter costs will hit as soon as the next report. So they're saying that because the series is lagged, we're going to start seeing lower than normal shelter costs, and at the same time we'll be seeing the more up-to-date measure going up, kind of tricking the Federal Reserve into cutting when housing prices are about to spike up again. But housing is not the only factor involved in here, and I really think that the economic data suggests that if you don't cut rates, that you will create a recession. So let's hear. In any case, however, one looks at today's report, the bottom line is clear. The Doves have it, and now the ball is in the Fed's court to decide whether to keep the dots at 3 cuts or to move to 2, even as the hawkish 1-cut case has been officially eliminated. So in other words, you could see another pretty major rally if it comes out at 2, essentially, or sorry, if it comes out at 3. No, actually, so if the median expectation for this is going to be 3 cuts, then if they move it to 2, the market could be disappointed by that. But I don't know. I'm kind of leaning towards 3. That one, I should probably be 50-50 on that one. So I guess I don't know what that one's going to be. For any Fed governor or district bank president who had been on the fence about 1 rate cut or 2 for 2024, this might have tipped them over. All eyes at 2 p.m. in Washington will be on what the median estimate for the year-end policy rate. And to underscore that, there are some of the notable Wall Street reactions. I don't know if we really need to read all this. Lindsay Rosner of Goldman Sachs Asset Management. This was good news, but is one piece of news. June is a no-go. We have felt July the same. Again, today is a good print for restrictive rates working to quell inflation, so September is a possibility. Yes. Bloomberg's economic team's May soft core CPI reading should reassure that the Fed that inflation is slowing. Disinflation was brought across both goods and services categories. We expect core CPI prints over the summer to proceed at a mostly similar pace, with 3 more moderate prints in hand by the time of the September FOMC meeting. We think Fed officials will be convinced to start cutting rates then. Gamestop's not stopping? Let's see, I'll pull it up again. No, we covered this earlier in the stream, but I'll talk about it again. The big news out this morning is that Citron Research was short and says that they have covered their short. They were short again. I don't know why, but you think that they would have learned the first time. And there was it was a pretty salty comment too that they tweeted. Okay, but I suspect that this rise that we saw late yesterday afternoon was Citron research covering. If that is the case, that you kind of have to discount this, right? Because that doesn't tell you anything about retail traders' ability to continue propping this up. Okay, but if this had been a down day, I think that would have really killed the retail traders, and they survived. So I think anything's possible. They haven't done another big run yet, but like, let's say it does what it did yesterday. That could be, then you could get back into crazy territory again, huh? For the moment, though, even after yesterday's crazy run-up, what I see is a stock that is not nearly as interesting as it was, and that kind of suggests to me that maybe people are losing interest, and that the flow that huge buy flow that they would need to keep this going is not going to come. So, but let's give it another day before we make too big of a conclusion on that one, right? The decline in oil looks really big, but it's actually not that much. It's actually just a retrace of the overnight move. I'm still looking at this for the Federal Reserve meeting. What can we game out about the Federal Reserve meeting based on what we've seen this morning? The S&P 500 is up 1.14%. So it would really be like a wild up day if the market really loved the Federal Reserve meeting and went higher. But there's a real possibility of pullback, I think. The CPI, I think we had a good reading on what the CPI was going to be, and we could have played that. But the Fed meeting, I don't know. Last time we had a good reading on what the Fed meeting was going to be like too, but this time I think no. Maybe the Fed should just change their target to 3% and call it a day. Maybe. No, you can't say it 3%. Money for the stocks is not there to pump it like GameStop and AMC. You really gotta wonder, because most of these apes, they've been in it this whole time and just been holding, right? Supposedly. The thing is that it was only 20% short, right? So Citron covered what percent short are they now? Is there now? I don't know about that. There has to be more volume to pump it than last time. But the thing that I constantly find in the markets, I mean, there are exceptions to the rule, but most of the time, the first trade is the best trade. You get some huge event and everybody gets on board it and everything. The next time that thing happens, people are like, that already happened before, and they're not as interested. So it would be very difficult for them to surpass the 2021 highs. I wish I knew more about the Citron thing, like what prices they got in and out on and stuff like that. Because if they came out and they said our average exit price was 29, then I know that that thing yesterday was them, and I can kind of discount this whole thing and say their retail is still struggling. And we got to be careful about profit taking pushing us down. What's this Quake 4? I don't. Oh no, the Quake 4 is old game. Never mind. Never mind. Approve or ban when talking about the Citron covered. If they were lying, that would be market manipulation. So. I guess I should go to the Star Wars subreddits and see if they have it like episode 3. Okay, well, the drinker doesn't have an episode 3 read yet, so. Acolyte isn't ruining Star Wars. You are. Treasuries are still pushing on the edge there, man. They're not letting up. They kind of settled for a little bit at 17, but like right back up. I'm not seeing the volumes come along with it, so does look like the dollar faded there though. It's like the CW did Star Wars. Oh man, that's an insult. Ouch. You know who I haven't seen? I shouldn't even mention this, but like again, the Star Wars drama. We need to see Overlord DVD. YouTube doesn't show him to me anymore. He's still there. Yes, he's still there. Yes. He hasn't posted a video on Star Wars in 6 days, and then 2 days ago he wrote one about Adobe. You've seen this thing about Adobe, where Adobe basically said in their new terms of service that we can use like anything that you create with our software belongs to us, and so their users are just deleting it en masse. Like, I don't know what's going on over there at Adobe. Is this like a we're going under anyways sort of a move? I don't know. That's just wild to me. But like, people are so pissed about it. It's wild. Can't imagine. Like, Photoshop. Photoshop has been the thing my whole life. Like, I can remember first getting onto the internet at like 12 or 14. And, you know, there was Photoshop. So if Photoshop dies, like, holy crap, guys. What is this world coming to? You know, I don't like the when you can move up or down 4 ticks on like nothing and it not be a big deal. That is not the action I like to be in. Well, coming back to our chart here. So like, just based on how smooth it is, how much would I like to be in a trade? Okay. Well, this downtrend's not too bad. That one's kind of a little bit, yeah, I don't know, the first 30 minutes. I don't know if I would have predicted that one. No. Okay, but then there's this. That's freaking amazing. That's freaking amazing. In fact, I think you could even justify staying in it up until about here. Maybe? Nah, cause like, look at that right there. So really, it's about this point. Yeah. Right here is where it stopped. Okay. So now you get this thing where it goes up 6, down 4, up 4, down 4. Don't like that. No. Don't like that. That's sideways chop. No, thank you. So with that, I will close the stream down for now. Again, I will be on the live stream for NinjaTrader customers. So if you have NinjaTrader, you can go and check me out there. And then I will come back and I will stream the press conference for you guys. So see you guys then. In the meantime,